We are at the NASDAQ market site today for the 40th anniversary of the NASDAQ 100 index. Now, you probably know this tracks the 100 largest non-financial stocks on NASDAQ. 94 exchange-traded funds track the NDX, that's what we call the NASDAQ 100, in over 20 countries, including the Invesco Triple Qs. That is the 5th largest ETF in the United States. Let's talk with Nelson Griggs. He's the president of NASDAQ. He runs the place. And with Todd Sohn, head of ETFs for Strategas. Nelson, NASDAQ 100 is synonymous with tech, but today we have this big news story. This China firm, DeepSeek, reportedly launching an AI model at considerably less cost than the U.S. models. You're the keeper of the NASDAQ 100. Yeah. What does this mean for that? What does it mean for NVIDIA? What does it mean for Microsoft? What does it mean for the whole group?
Well, a couple things. I'll take a step back. So the NASDAQ 100, again, 40 years, averaging 14.25% compounded yearly returns. So it has a great long-term track record. It's 60% technology, 20% consumer, the rest healthcare and industrials. So it is a little more diversified than you would normally think. But if you do look at the news story of the day, there's a lot of companies that are attached to AI in the NASDAQ 100 for sure. So it is seen obviously a downturn today. But those companies are the innovators of the world. They're going to have to get through this moment, and I think you look at their track record, and they've got a great story of doing that, and we'll see how they all adapt.
Yeah, there's all this talk about lower capital expenditures. Isn't lower capital expenditures good for the AI story? I mean, lower capital expenditures make it more accessible and faster and easier for other companies to adopt AI. At least that's the way I would look at it. I mean,
it'll be a story to play out on an individual company basis, because some companies will certainly benefit from a lower cost of capital when they think about the R&D efforts, and others that are more directly in it will have to, again, they're innovative companies that we've seen them get through any sort of difficult times over the years. They've shown they can do that. So.
Todd, let me bring in you. I often go to you. You're my resident ETF guru on all things. The NASDAQ 100 is one of the most successful indexes of all time. Most people don't know it launched 40 years ago. The Triple Q NASDAQ 100 ETF launched in 1999. Prior to that, people ask me all the time, you really couldn't invest in the NASDAQ 100. You had NASDAQ 100 futures, right? But that wasn't easy for an average person to invest in. So essentially, QQQs launched in 1999, as I recall. There is an astonishing universe of products around the NASDAQ 100 ETFs, 94 of them, Nelson told us about earlier. Why is this product so successful? And it didn't just happen this year. This was not 2023. It's been successful for a long time. So
when you think about the NASDAQ 100, I would put it on the Mount Rushmore of indices, right? Performance and the ecosystem, the measurements of that. The performance has been fantastic, and now, because it's been so successful, you have issuers out there in the ETF space wanting to take advantage of the ecosystem, right? Of the constituents involved in that. So I can get plain vanilla, I can get equal weight if I'm worried about concentration risk. I can go super concentrated now, just get the top of the Qs, or I can sell covered calls on it, right? There's so many different ways to get the power of this index, and as we always like to say, ETFs are about access, right? So the Qs gave you access to the NASDAQ 100, and now the ETF ecosystem gives you access to all these different strategies involving those constituents.
Go ahead, tout your product here. I mean, that's a very good introduction.
I think that's amazing introduction, but we have an incredible team here that we are investing a lot more than ever, because it is a partnership. So companies come to us, firms come to us, whether it's Invesco, First Trust, great partners of ours, or we go to them and bring ideas, and that team helps construct all these wonderful products. And I think the demand we're seeing, obviously saw heavy demand in retail, but now it's branching out into wealth channels, it's branching out into institutional insurance products, and as you mentioned earlier, Bob, global. So we still think we're in the pretty early inning years of what the index can become.
There is an astonishing amount of derivative products and leverage products around this. So I'm looking today at the biggest volume ETFs that are out there, and I see things like the ProShares Triple Q 3X. That means you get 3 times. If it's up 2 times, you get 6%, 2% you get 6%, and the ProShares Ultra Pro Short Triple Q, which is 3 times inverse here. Yeah. Both of them are among the heaviest volume ETFs. I think they're 1 and 2, and then maybe the semiconductor ETF. So there's just one simple product, leverage and inverse products, and there's dozens of others that are around them at this point.
I even think more impressive, right? So the Qs are a top 5 ETF in terms of assets. The mini QQQ, QQQM, right, slightly cheaper version,